Well, let's get this going with our first guest on the show. Fook Hien Yap, a senior investment strategist at Standard Chartered. He's joining us now. Fook, great to have you with us here as always. Good morning.
Good morning.
So this looks good for more, Fook, in your opinion?
Yeah, in terms of the equity market, I think what we are seeing is, while we do think there's risk, upside risk, more of a melt up, if you like. I think the positioning data that we see indicates that the bears have not really thrown in the towel, and the positioning still argues for a bit more upside in terms of the markets globally. And the inflation is coming off, and I think it's the Fed meetings that's going to be quite live right now. Our house view, is that 5.5% it's done for the rest of the year. Is our view, but we'll wait until September to see what happens there. But with signs that inflation is coming down, and then positioning from investors, we think are still not that bullish. So we think there is still scope for the market to go up and to rise a bit more. But our view really is to lean to Asia, lean to Asia equities. That's our preference. We do like Asia, and it's broad across Asia, including Japan. China is seeing a rebound. India made a new highs 2 weeks ago. And then in the earnings data as well, I think we're seeing Korea a bit of a rebound in the earnings. So we do like Asia equities. That's where we would lean towards.
Got it. So you like Asian equities. That's always great for markets like ours, right? And you said that the bears have not thrown in their towel just yet, so there could be more upsides. Do you reckon that a large part of the upside is already done, though, especially for a market like India? At what point of the upcycle are we in right now?
Yeah, we don't have any specific price target. I mean, we are neutral for global equities on a 6 to 12 month basis. This is for our view in 2024. But in the near term, we think there is a bit more to go. And our preference really is to lean to Asia. I mean, I'm not going to be able to quantify in terms of the upside that we see. But the earnings that's being delivered in India is very strong. We think that's double digit. That's going to be set to continue. I wouldn't really play the multiples expansion, but it's more of the earnings story continuing. But then look at it, I mean, in Asia, other parts of China, it's a big rebound that we're seeing. And then Korea as well, a big rebound in earnings there. So we do like these markets. And what we're saying to investors is to be overweight on these markets, but be diversified across the board in terms of the different Asian markets out there.
Okay, got that. Fook, do you look at India more specifically? What is it? If you do, then what is it that you like in the market at present? Where do you find growth and reasonable value, perhaps?
Yeah, within India, the market that we like the small and the mid caps. I think that's been very strong. Momentum has been very strong, outperforming the Nifty there. We think that can continue. And if you look at the earnings revision data, actually, fundamentally, that's what we look at. Compared to the start of the year, earnings revision has been much stronger for the small and mid caps. So that's something that we prefer. In terms of the sector perspective, what we like is your financials and industrials and healthcare. So it's a bit of a barbell approach. We think the financials credit demand continues to be strong. Industrials, in terms of the government's capex policy, is good. And having healthcare in there just balances it out. I mean, healthcare is a bit more defensive. And if you go into a bit more of an uncertain environment, we think it's good to have it in there. So those are the three sectors that we're overweight in India to balance it out, like I say, a bit of a barbell approach.
All right. Folks, sorry, when you say healthcare, that is, you mean hospitals or not hospitals, right? Not pharma.
It'll be the healthcare sector that we look at. I mean, specifically, we're looking at the very broad healthcare sector that includes farmers and hospitals.
Okay,
and,
got it.
Got it.
That's right.
Got
it. Just wanted to clear that. Fook, thanks very much. Great speaking with you. Appreciate you joining in with that perspective. It's always a pleasure having you here on CNBC-TV18. We'll take a quick commercial break here. A list of top stocks to watch is what's lined up next. Stay with us. We are back in 2.